In this video, we're going to analyze 8 charts to arrive at a conclusion whether the market will actually crash next week or not. And why would we be talking about the market crash? Market crash, not money. Well, because the stocks have been on a significant run, and if there is anything I can teach you, nothing goes up astronomically without making a pullback. Nothing falls consistently without making a pullback higher. So in these charts, chart number 1, I think, is the most important one. And you're going to be like, dude, seriously? You're still talking about Amazon after you got it wrong? It was supposed to drop $120 based on your prediction. Yes, I didn't nail that one 100%. But I don't think I did a poor job on that either. And let me show you why. Out of all the earnings quarters, okay, typically Amazon goes higher. In this particular case, it did not. Yes, it did not drop $120 yet. But let me show you this chart that I think will make it clear what's about to happen. Look, a couple of weeks ago, I sent out an alert on ALGT, which is, a little airline, right? So I sent out an alert when the stock was trading around $140. Unfortunately, okay, the timing did not work out on that trade. The options expired literally just a few days before the stock actually did do this. Okay, and if you'd like to review some of the reasons why I suggested shorting the stock, a couple of weeks ago, you should find the video that says 5 reasons why I shorted ALGT, and you can go and review it. One of them was these bearish death cross right here, and sometimes when this bearish crossover takes place, the stocks, they immediately drop. Sometimes they work themselves a little bit higher. Sometimes they go sideways before they drop. Now, clearly, if you would have just simply gone longer time, this trade, even though you would have paid a little bit more for the options going instead of maybe 2 weeks, you would have gone 4 weeks, or I think that one trades monthly. So you would have to go like a month and a half. It would still produce substantial return, maybe 200-300%. Not some of the crazy returns that I'm going to show you that actually took place this week. So if you really like to know which trades did we take, stay tuned, okay, because this is going to be a lot of fun. This has been a crazy week. It's been a total roller coaster, but it's been a lot of fun. This is why we do this stuff, guys, okay? So back to Amazon. What am I trying to say here? Well, I'm trying to say there's such market phenomena that I call a delay effect. When the drop of the $120, it looks like it did not take place. Well, actually, I know some of you are pretty hardcore traders, right? So you would have definitely observed this, right? When initially the earnings was announced, it did drop to $1,706.96. Technically, it would have been roughly $110, $120 drop. Actually, would have been bigger than that, I think, because it went into earnings at what, 18.20 roughly. So that actually would have been almost $120 drop. It immediately bounced. But in my observations, looking at the history of these pre-market after our trading sessions, typically that low in some instances is going to be revisited. So I'm actually going to walk you from an entire trade because to me, prediction is one thing, but actually putting the actual trade off of the earnings is an entirely different thing, right? As a matter of fact, some of the best trades from the perspective of a short seller, okay, what you want to do is initially you want the stock to actually go higher. Okay, so from the trading perspective, Amazon gave us an insane opportunity to profit today, which is Friday, July 27th. So for those of you that have watched my Amazon price prediction, okay, I clearly stated in that video, even though this is what I foresee the charts are telling us is going to take place, okay, I specifically go into detail saying I never buy options before earnings. And there's actually a number of reasons for that, but the number one reason, it just defies the simple strategy of buying low and sell high. You cannot buy options cheaply the day before earnings, or even if you buy them ahead of time, right? You just can't buy them cheaply because they're going to be inflated. There's going to be extra premiums you're going to end up paying. So the only strategy then you would be left with is, if you buy options right before earnings, is buy high and sell even way the heck higher. And sometimes it works, but I promise you in 90%, it's not going to work. It is, to me, a low probability trade. So that's why I don't buy options before earnings. Yes, you can get lucky a few times here and there, but I would rather much wait till the company actually announced earnings and then place my trade. So what am I saying here? I'm saying this Amazon is going to do exactly what ALGT did. We don't know the exact timing, so if you want to protect yourself, in other words, Amazon could drop, in my view, still $100. It ended up finishing the day, what, plus 10, 13 bucks, something like that, after hitting the low of 1806. But I think in the near future, we're more likely to see Amazon doing something like this. So, and to make sure that you don't miss out on a move like that, maybe just give yourself a little extra time. Go 30 days out, 60 days out on your option. Yeah, it's not going to be some of the killer percentages like I'm about to show you in this video on some trades we did this week, but it's going to make you definitely some pretty good money. So, okay, why do I think this is the most important chart? Well, I think Amazon being everybody's favorite. And when I say everybody's favorite, meaning institutional investors, everybody's favorite, okay? Last time, it had, however, a similar situation. It made a significant pullback, and even though it doesn't look like a meaningful pullback here on the chart right here, but it did drop about 60, 70 bucks after this big black candle right here, which to me, again, is a sign of a heavy institutional selling. We're noticing as the stock was reaching its all-time high yesterday, which in pre-market hours was as high as 1896. Okay, it sold off. So in other words, the institutional investors were coming in and they were selling the stock. Now, your question may be, why were they selling it? What were they thinking? Didn't they just announce the best earnings quarter ever? Yes, it certainly did. But the other question we may be asking ourselves is, could this be the best earnings quarter Amazon actually will have in the near future? Because the way institutional investors look at picking the stocks and making a decision whether they should be buying a stock or not is not based on the current quarter. It's based on what's coming next. They're buying the future. And Amazon did not really give us a very, as good of a picture as it typically does as far as future sales growth, right? It's actually seeing a slowdown. So not only did it miss the sales number this quarter, but it's also given a poor projection, less what the institutional investors were expecting for the next quarter as well. Now, combine that information with what Facebook just said yesterday, right? That does not paint a very pretty picture for the FANG stocks. Why do we care about FANG stocks? Well, because they're the ones that comprise the majority of the index. So if the FANG stocks continue this drop, or what yet may not appear to some of you as a drop in Amazon, to me it's just the very early portion of the drop. This is where the reversal is happening to me, is looking like it's happening to me. It's sort of, this is the root. This is the very early stage of the reversal. So if that's the case with Amazon, and Amazon drops a couple $100 from here, Facebook already did the drop, it's naturally going to impact pretty much all the other technology stocks, whether we like it or not. So, in my view, it has a high probability of happening. Why? Well, because after these earnings report, they could have easily taken the stock way higher, right? But clearly, to a lot of institutional investors, there were some concerns. That's why the stock did not go higher. That's why they decided right here, for now, we're going to take profits. And because so many people had such a huge hope for Amazon to go much higher, we didn't see as crazy of a drop. I mean, I don't know. Maybe it has something to do with them losing billions of dollars on Facebook last night. They couldn't take 2 hits in a row, so they had to maybe artificially sustain this price without letting it drop below this 1800 support level. But I think the support will be broken. As a matter of fact, I'm 99.9% confident that support level of $1,800 will be broken Monday or Tuesday. Okay? Some of the things that I see, as you know, I like to look at the divergences. The number one divergence here that's really screaming at me is this. You see how Amazon price just keeps going higher and higher? All the way from here, all the way here. I drew this partial line right here, this arrow. Well, I also drew another arrow right here. As far as the RSI concerned, it's going lower. See, this should not be happening. When the stock price keeps going higher, RSI typically should also be going higher, but that's not what's happening, right? So now the ultimate high, at the ultimate all-time high of Amazon, actually the relative strength was significantly lower than it was at the levels right here of 1700, 1750, 1800. So when it went to 1896 or 1870, when it opened up this morning, look, the relative strength actually was going lower. So again, this is a very good case of divergence to me. It does not necessarily mean that the stock is going to crash, 50% or 20%, but it does tell me that the reversal right here is in the making. And if the reversal is taking place in one of the best stocks in the index, then I think it's going to touch some of the other technology companies, and therefore I am thinking I will reveal actually specifically what I'm thinking numerically as far as the price targets for some of the indexes at the end of this video. So stay tuned as far as that goes. Okay, look, on the accumulation distribution, this is actually the very first time where we're seeing a huge chunk actually was taken out of the accumulation distribution index right here. Look, this has not, I mean, last time that happened, geez, this wasn't as big of a move right here, but look, it dropped from, $1,550 to almost $1,400. Last time we had a big chunk like that taken out of the accumulation distribution. So I'm looking at this and I'm thinking, look, we're not done here. Maybe they were able to hold that $1,800 level so far, but we're nowhere close to where this thing could fall, okay? I'm going to throw a number out there. I know you're going to be like, dude, stop throwing these numbers. It hasn't even followed the $120 you're talking about. Look, but I know there's a lot of controversial opinions that are very different from mine. Actually, they're not controversial. It happens that my opinion is controversial, but I stand by it because I really believe in it. And so, that just expresses my personal view on this situation. I think the stock is going back to $1,550 over the course of the next 60 to possibly 90 days. Now, the stock may, of course, get lifted, around November, the big Black Friday events and so on. Typically, it's a positive for the stock. It may run, maybe going into that. But for the next 60 days, I don't see anything good for this thing. I see a potential to buy some puts and make money on a pullback here. A healthy pullback, that is. All right, so let's take a closer look at actually, so we had a little bit of a time delay effect on the downside, which has actually turned out a very positive thing from the standpoint of actually trading options. I mentioned earlier, one of the best moves, and you probably know I've came up with a formula of 13 market moves, which helps me track some of these moves and the sequences to observe and play some of these daily trades. I don't believe anybody has anything close like that for day trading, and it really increases your accuracy. It really increases actually your ability to identify when it's time to trade and when it's time not to trade. So if you have not taken that 13 market moves course yet, definitely click the link below, check it out, and take action so you can make this year the best trading year you've ever had. But let me walk you through a trade. So number one, I see a head and shoulder pattern right here. Right, so after hours, Amazon, this is what it did. This is your head. This is your one shoulder. This is your other shoulder. Also, we can see a multi-top formation here. 1, 2, 3, 4 tops. Boom, after that, it starts dropping. Now, pre-market, Amazon opened around $1,870. So, naturally, okay, the news is still good. It's at $1,870. What are the bulls doing? Well, the bulls, they want to buy calls. Oh, Amazon, the best earnings beat. Let's load up on calls. Well, maybe not so fast, because the stock actually dropped from $1,870 all the way to $1,806. Now, a move like that, for some of you that are trading stocks, may be totally like, man, come on, what's the big deal here? It's $64 drop. Well, in terms of an option, it would have generated 700% gain. And you're going to say, okay, fine. Well, it's easy to say when, you're already looking at the chart and that already happened. Well, guys, if you were signed up to our options alerts, our VIP options alerts, this is what you would have received at 9:31 this morning. So here's the alert that went out. Amazon, 1,850 puts for 6.5. Now, again, when we're talking about 6.5, actually, each option controls 100 contracts, right? So you would be able to each contract controls 100 shares. So you would actually be spending $650, investing $650. Now let's walk you through the trade so you can see exactly if you would have acted on this alert, how much you would have made. $650 would have been your investment. Now, of course, you're not limited to just buying one contract, right? There is actually, on that strike price, there was probably 20,000 contracts that was traded yesterday, so they're highly liquid. You can sell at any time. Actually, you can sell 30 seconds before the market is actually closing. So the alert went out at 8:31, which corresponds to this purple dot right here. Purple dot, open around 1870. The alert goes out within the first 60 seconds, suggesting you buy 1,850 puts. While everybody's still buying calls right here. Oh, yeah, it's going to hit all-time high. It's going to the moon. It's going to 2,000, 2,100. Okay, so while everybody was so ecstatic and optimistic about this type of situations, we were highly optimistic about buying puts. Okay, as a matter of fact, I almost couldn't sleep. I actually sent out the alert to our, long-term option subscribers, suggesting that they buy some Amazon puts at like 4 or 5 in the morning. Before any of these actually materialized, specifically I said, look, when Amazon opens up in the morning, I want you to just start buying puts. Start buying puts, okay? So, anyways, this puts you would have been able to buy at $6.50. Now, I've talked to some of the subscribers, and actually some of them told me they were able to fill some of the orders as low as 4.5, 5, 5.2, 4.9, 5.5. So, this percentage gain would actually even be higher to some, depending on exactly what you paid for your option, right? Because within the first couple of minutes, these option prices, they change so fast that I know some of you were able to actually fill the order at 4.5, some were able to fill at 4.9, 5.5. So me filling the order between 6, 6.5 wasn't actually the best fill, but this 700% gain is based off the assumption that the put option was purchased for 6.5. So how does the math work? For those of you that trade stocks and are like, what's the big deal with a $64 drop? Well, here's the big deal, okay? The stock drops from 1850, actually drops from 1870 all the way to 1806. Well, your 1850 puts when the stock is trading at 1806 at about 12:45 or 1 p.m. on a Friday, you still got 4 hours left. So not only would it be worth exactly the difference between 1806 and 1850, which is $44, but it was also going to be a premium. And the premium is not going to be significant at the day of expiration, but still in a high volatility stocks like Amazon, the premium could still be extra few dollars on top of the amount that you're actually in the money. So you were buying them for $6.50 right now. When it hit a low of 1806, those puts were worth in excess of $46. So you would have been investing $650. You would have been selling them here for $4,600. Now, I think the cool thing about it is that you would have been able to do it in under 4 hours. Okay, if you'd like to learn how to actually capture returns like that yourself, just click the button below, subscribe, if you're not subscribed to the channel yet, but click some of the links below this video. I've recorded some courses. There's a ton of information available that could help you get a better trader so you can catch 700% gains in under 4 hours. Now, guys, I'll tell you what, enough of Amazon. I think it's going to be an awesome trade next week. But this was actually not the best trade. This was an average trade this week, okay? The best trade, I'll show you the best trade if you want to know. The best trade was right here. I'm not even going to talk about CMG. These were buying at 40 cents, selling them at $1.60. We're expecting a reversal in CMG. It did reverse from 481 all the way to 464 at one point in the day. So all of these were making about 300+%. Now, BKNG, this is the trade that's actually noteworthy. Okay, this is kind of fun. These are the kind of trades that I like, guys. These are the trades that I get excited about. And let me walk you through this one real quick. And then I'll show you some other stuff. Okay, so 1,700 to 2,400% in BKNG in less than 3 hours. How the heck do you do this? Okay, very simple, guys. Okay, I use, for my idea generation, I use different strategies. But one of my favorite ones is the correlations. And I'm not going to go into a lot of details right now as far as why was a trade taken. I'm just going to show you exactly how the math breaks down in this trade. So here's the alert. Alert goes out at 10:41 a.m. Okay, so here's your time frame. So you can see Friday, today, there's 10 in the morning, here's 11, 12, 1 o'clock. So the trade took place from 10:41 till roughly 1 o'clock, which is why I say it's under 3 hours. Here's the alert. Just take a look at it one more time. Again, 10:41, here's your time. 10:41, you would have been getting an alert. The alert suggests that you buy 2105 puts at 2.6, which would be $260 per contract. Or you could have been buying $2,100 strike puts at $1.65, which means it would have costed you, $165 a contract. So let's say you were actually holding, you were actually invested $1,600. Let's say you bought 10 puts on BKNG. Let's say what would that have actually accomplished for you? So let's take a closer look. I mean, this is where stuff gets exciting, guys, okay? So here it is, alert at 10:41. Let's say we walk through the example where you buy the 2100, this red markup put right here. So 2100 puts at 1.65. Let's say you bought 10 of them. So you spent $1,650. By 1 o'clock, these puts were worth $40 plus. So let's say you would have been able to sell them at 41, 42 for a little bit of a premium. Okay, so you've got $42,000 back on the investment of $1,650. Now that's a 2,400% return. That's how you do it, and you can clearly see the time frame on which it was executed. Now these alerts you don't get with the long-term alerts. This is for heavy traders that believe and breathe trading, and for some people maybe trying to transition from being a part-time trader going into trading full-time and that sort of thing. Now, I wouldn't encourage anybody to just automatically jump out of whatever you're doing and jump into day trading. Definitely, there's a little bit of a learning curve, but I've combined a lot of courses that you can take, some information below. Just check it out. Take advantage if you want to be a better trader. I've traded for 12 years, and I basically try to combine every little detail that helps me be a better trader. And clearly, there's some days where I make losses, I make bad calls, but overall, when you can catch a few trades or a 2,400% return, they will compensate for some of your 30% losers, 50% losers, and so on. As you can clearly see, a lot of questions I get as, well, do I need a big account? Do I need 200 grand in my account? No, okay? Start small. Put some small, like in this case, BKNG contract, you would have been able to get in, like, look, it was $1.65. So all you would have needed was $165 to acquire a position that you would have been able to sell 3 hours later for $4,200. Okay, so it doesn't take hundreds of thousands of dollars to get started here. Anybody can do it, and most of the brokerage places will let you start an account these days with just a couple of $1,000, if that. That may actually change to a lower amount by now. So, okay, going back to another trade, Spotify, right? Here's another alert. And look, for some of you that are really limited, like, look, these contracts were for 15 cents. So you would have literally been spending $15, right, on Spotify. Now, Spotify and me, we are fighting this week. I placed a number of trades on Spotify that actually lost money, because I'll show you why. But finally, on a couple of trades over the last 48 hours, Spotify paid me back. And not only the interest plus a significant amount. Okay, so here's the deal. Spotify, some of the alerts went out on Spotify to buy 175 puts, 170 puts. After the earnings, it actually dipped. And so I expected it to continue because that dip was not significant in relation to the appreciation that the stock has had over the last couple of months. So I thought it was going to make a pullback to at least 158. Now, I was wrong in that estimate. However, I was able to finally catch the top right here yesterday around the 196, 198 range, represented by this red dot. So then catch a nice $12 move lower. That was a 600-700% right here. And again, this morning gave me a great chance to actually, this is like, I mean, this was a super easy trade, right? So at the time, it was trading at 190, 192, represented by this red bar right here. The 185 puts were selling for 15 cents, right? So clearly, and so 185 would be the level right here. As you can see, shortly after that, we're looking time frame under 2 hours, talking about a highly profitable trade that produces a 1,700% gain under 2 hours. Guys, this is real. You can't do this every day, but if you know what to look for, you will be able to have days like this. Just in these alerts, look, I've shown you some returns, 2 returns of 1,700%, 1 return 2,400%. The worst return was on Amazon, and that was 700%. You combine all these returns, look, there's over 5,000% in gains today alone, July 27th. Okay, so again, how does this trade break down? Well, the 185 puts, you would have been buying for 15 cents. Okay, you would have been selling them roughly for 2.6, and you had actually 2 opportunities. If you missed an initial dip right here, you would have had a second opportunity to sell them. A lot of times I use special strategies. I talk about in my courses when to get in, when to get out of the trades, how to scale in, how to scale out, and so on. So, take advantage of that. But look how fast this happened, right? Boom, you would have bought them right here. You would have gotten out here or here. And so at one point, they were actually worth even a little bit more than that. But even if you didn't ultimately close at the very, very lows of the day, you would have still come out easily 1,500, 1,600% on your gains. And that clearly illustrates, if you know which days to trade, when and how and what to look for, you don't necessarily need a huge amount of capital to get some traction. Okay, let's take a look again at some of the charts. They're just screaming at me that there is one particular trend that is so predominant right now that the market literally has 0 probability of going higher. You're going to be like, man, that's a pretty crazy probability. I would even say this, like probability would be like negative for the market to hit all-time high. You're going to be seeing like, buddy, you lost your mind. You lost your mind. What are you on? What are you taking? Look, I don't take anything. I just like coffee, okay? That's straight up truth, okay? But I just get excited about stocks. I get excited about moments like this when I look at multiple charts, and what I see is one sign that just screams at me and says, look, this is the top. Remember a few days ago, we were taking a look at this Microsoft chart, right? And I said, look at this black candle right here. To me, it represents institutional selling. So again, sometimes it won't fall directly after the black candle, okay? But look at the huge selling that we just had, right? I mean, this is absolutely amazing. Even a strong stock like Microsoft with a strong earnings report just can't sustain the fresh levels. It cannot sustain the highs. And so if Microsoft cannot sustain the highs, look what happens around this stop. If we take a look at the accumulation distribution, look, they were selling it during the earnings report after that great announcement. As the stock goes higher, they actually keep selling it. So to me, that is definitely the temporary top, and the move from here is back to the 101, 100. So maybe if it dips to 98, we can see some buyers on Microsoft. But until that happens, right? And what would that move represent? Guys, that would represent roughly a 9 to 10% move lower. So that's Microsoft. Why would I be looking at Microsoft? Well, that's one of the best stocks in the technology sector. Again, because now it's capturing some cloud business. from the market share of Amazon. I mean, it's really rolling again like it did back in the 90s, right? So that's one I definitely want to pay attention to when I'm looking at what's happening with the overall sector, speaking about the technology sector. Okay, let's take a look at Google. Wow, what a chart. You will say, oh my God, dude, this is a cup with a handle. It looks so nice, and then it breaks out. Yes, I know. This is probably the best looking chart and the most bullish looking chart out of all the FANG names. But hold on. Look at this sell-off. What's going on, right? I mean, it's just things do not add up. You cannot have one FANG stock out of 5 FANG stocks take the markets higher. It's just not going to happen. So ultimately, yes, it did stop at the support level. Typically, this gap would not close itself. There's a high probability it would not. So this actually would represent a great opportunity to come in and buy the stocks at this level. But considering the environment, considering how the market got scared of that 4.1 GDP, which inevitably spells higher interest rates going forward. The market does not want to hear about this higher interest rates. And apparently now that the trade wars have sort of been smoothed out, at least with Europe for some time, we know that it was not just the trade wars that the market was mainly occupied with and worried about. It's the interest rates. So the interest rates, I think, is going to be the talk of the market for the next month. I think that's what's ultimately going to bring the stock markets lower. But again, we're trying to identify the predominant move, the predominant trend. And the predominant trend to me, every time I see good stocks report good earnings, huge beats like Amazon, like Microsoft, they're not really buying them. Yes, it looks like as if they are going higher. But apparently, not as many investors are excited even about Google. As huge of earnings bid as Google had, Google actually did not have a slowdown in revenue growth. Surprisingly, 20% plus pretty much every quarter nonstop, right? So actually, in my view, it reported the best earnings results. But that has not stopped the investors from selling it like crazy yesterday, down $32 or almost 3%. Okay, so very interesting observation. That's how the strongest one looks. And as rare as it happens, I think it actually does have a probability of closing that gap. That's $52 lower. I know it's a low probability, but in my view, this time it could actually take place. So I wouldn't expect Google, though, to fall as much as some of the other stocks. Now, this stock this week needs no introduction. Facebook, we all know what happened. $100 billion wiped out. Okay, when everybody was extremely bullish. And again, on the accumulation distribution, yes, they did come in and sell the stock, opposed to last time it was falling from 180 to 150. There's actually a lot of people coming in and actually buying the stock at those levels. We're not seeing that today. It could have actually bounced. Remember when Netflix announced the earnings fell to 350 and it bounced? Well, Facebook could have easily done that today, and it surely made a little bit of an effort. Went from 174 to 181 today, and then it dropped back to 174. So it was completely unable to sustain the second day, what I would call even a dead cat bounce. It couldn't even pull that off, which spells further trouble to the stock. In my view, we'll see it back to 150, maybe the course of the next 60 days. And maybe then they'll come in and, they'll support the stock there. But tons of bearish things, right? The MACD, the accumulation distribution, Jesus. I mean, we haven't seen Facebook at 29 on RSI and since this, crazy stuff happened back in March, right? So it's finally there. I know some of you may argue, okay, well, now it's going to just jump and bounce from here. Clearly, with the RSI being so oversold, people are going to start coming in and buying it. Look, I disagree with that. I don't see it happening. I think, I'm not saying the RSI is going to drop to, 10 or 5, but I am saying is maybe just in this range here between 25 and maybe 32 for quite some time. I'm just not seeing a ton of buyers trying to come in and buy this thing, not with the, just think about it this way. All of these stocks, Amazon, the story with Amazon was it's the growth. You have to understand one thing. Amazon has not made money literally in 20 years. If you take the cloud services away from Amazon, it's actually losing money. Okay, and so now the competition is trying to attack that, so it sort of puts the entire growth story of Amazon under question. The same thing with Facebook, right? Well, maybe not as many people are considering the advertising that they're posting on Facebook effective anymore, which sort of been my main theory for why ultimately, if when the advertising costs go up, which they have been going up with Facebook consistently, and if people are getting lesser results with them because maybe the consumer is not engaging as much, or maybe they're clicking but they're not buying as much as they have been because more and more people are advertising maybe the similar thing or the similar product or service. So I think at some point all of that plays an effect, and maybe opposed to placing an ad on Facebook, maybe somebody will consider placing an ad on Google or somewhere else, or they'll come up with something else, right? So of course Instagram is the story for Facebook right now, but again, there's just I'm not sure how much traction this revenues from advertising are going to have much further. It looks like Facebook has picked, which is why we're having such a crazy overreaction. So far, what do we have? We've had Amazon not going higher on earnings. We had Microsoft barely moved on earnings. We've had Google actually did go higher, and then it's being restrained, at least for now, and looks like heavy volume and heavy sell-off from what really should have been a further move higher. Facebook completely done, now almost not longer a growth story. Heavy selling, 20-25% drop. And to top off the list, look, this one has been really hanging in there for quite some time. Jeez, look at this one. Look at this red bar right here yesterday. Followed straight after this bearish candle formation. Wow. Unbelievable. I mean, we have not seen a move like that in Apple in some time. Okay, so that's the stock that looked like it was working its way higher and was going to break out maybe above 200, but now it looks like a straight double top to me. The reason I say it looks like a double top because when it was trading at this range of 195 earlier, the RSI was much higher than where it's at now. So to me, it's another case of diminishing RSI. In other words, as the stock tries to go higher, the strength of the stock actually diminishes. Therefore, it's not going to be able to break out higher from here. So, I'm not saying that Apple is going to drop on earnings immediately. As we have seen with the FANG stocks, a lot of them actually go higher, but then they fail to rally further. So I am expecting maybe Apple to bounce a little bit higher at earnings and then sell off, similar to what pretty much Amazon has done. Now we've got other bearish signals here. We've finally seen people are starting to come in, take profits. Seeing bearish crossover developing on the MACD. So we got multiple signs pointing out that the elephant in the room is about to go down. So what do we make out of this? Got 8 charts, top FANG stocks, unanimously pointing out that as NASDAQ is going to its all-time high. Where is that thing? Where is NASDAQ? Hey, here's NASDAQ. Here it is. Okay, boom. So as NASDAQ actually tries to go to its all-time high, it's actually failing miserably, right? Because all the key stocks are having a really hard time going higher. So if all the key stocks, which are again all your FANG stocks, Amazon, Facebook's, Apple's, and Google's, if they're having a hard time getting the momentum to rally and on what appears to be one of the best earnings that they've had, right? Besides Facebook, the index is going to reverse. The question is by how much? Well, to me, it's a matter of whether it's going to be 5 or 10%. So 5 to 10% would represent a level of 73.50 or as low as 6,900 on NASDAQ. And if you have the same question for me on S&P, I'm going to give you that number in just a second. And see how similar these graphs are when you compare. This is why I'm basically saying, keeping track of Apple or Amazon, is just like looking at the index itself, because their graphs are pretty much identical, right? So here's the sell-off in NASDAQ. I mean, here's your huge volume, here's your crossover in the MACD, here's your finally, people are starting to come in and take profits, which is awesome. So if you don't have any short positions right now, I think this is one of the best times. Clearly, we're finally having a one big day down, actually followed by, a small, is followed by what yesterday was a smaller day lower, right? So now we sort of have a sequence of 2 consecutive days lower. I think that could intensify going into next week. We could see a significant drop. The cool thing is the accumulation distribution is still almost at its all-time high, and I think that represents that a lot more sellers could come in and start liquidating the stocks. And look, I know one thing, that indexes do not make new highs when RSI is actually in a downtrend. They could make new highs with RSI maybe at 60, 70. It doesn't have to be the highest on the chart, but at this point, the RSI is definitely taking a nosedive. So I'm not expecting any all-time highs in the next 2 weeks. I'm certainly, not expecting the next 2 weeks. I think this downward trend is going to continue August, September. So we got 60 days on some highly profitable opportunities as the markets are making this pullback from all-time highs. And as far as the S&P concerned, 2550 or 1680. That's the question. Again, that would be equivalent to roughly 5 to 10% drop from where we're at now. And we're noticing similar things, right? People are starting to come in, collect profits. We're about to make a bearish crossover here. High volume on the distribution days. Okay. Almost identical, right? The RSI does look much better here. However, I think if Monday, Tuesday, we're going to get another day lower, we're going to break under that 2800. Look, we could see 2550, 2680 in no time. All right, so I hope this video was helpful. Guys, if you are looking to trade stock options, okay, definitely click some of the links below. If you want to be a full-time trader, take the chart course where I talk about the divergences, how to identify some of these reversals before they actually take place. Definitely take advantage of some of this stuff. And if you are maybe a part-time trader, maybe you just want to get some alerts, sign up. There's a link below the video somewhere. Find it, click it, sign up, take advantage of it. This is going to be a very, very fun environment if you know what to look for with the next 60 days. So get ready to take advantage. Look, it is so exciting to me because we live in what appears to be the all-time highs of the United States history as far as the stock market concerned, right? So, this is exciting. Can you imagine being able to short the ultimate top of the stock market? We may not see these highs for another, 10, 20 years. Okay, what if, even if we didn't see them for another 5 years? I mean, can you imagine how exciting it would be to actually short the top and ride it all the way lower? I mean, that is just, I get excited about stuff like that. So if you are, take advantage of some of the information I've recorded to help you become a better trader. Sign up for some of the services and programs that we're offering. And make this year your best trading year ever. Thanks for listening, and I'll catch you on the next video.